Okay, let's be real. It feels like you can't go 5 minutes without hearing about artificial intelligence, right? The buzz is everywhere. But behind all that hype, there's a really big question a lot of us are asking. Is AI the next big thing for investors? We're going to break down what you need to know to even start thinking about that.
And that leads us right to the million-dollar question on everyone's mind. But, and this is super important, I've got to be crystal clear. This is not financial advice. Nope. The whole point of this explainer is just to get you up to speed, to give you the foundational knowledge you need, to have a really smart, informed chat with a professional who can give you that advice. All right, so first things first. Why is everyone talking about this right now? Well, it's because we are smack dab in the middle of what feels like a modern-day AI gold rush, and understanding the timing here is absolutely key. I mean, think about it. AI is weaving itself into the fabric of our daily lives, totally transforming huge industries, from how we get our healthcare to how we watch movies. And a massive, massive driver of this whole gold rush is what's happening on Wall Street. You see, for a lot of last year, the biggest names in tech, this so-called Magnificent Seven, they're actually lagging behind the rest of the market. But now, whoa, they are roaring back. And that comeback is being fueled almost entirely by the massive promise of AI. And that performance, it has shoved AI investing right back into the spotlight.
Okay, but before we can really get why investors are so hyped up, we gotta learn to speak the language, right? Let's take a quick second to decode the essential tech that's making all of this happen.
First on the list is generative AI. You've probably played with this. This is basically the creative force. It's the tech that can whip up brand new content. We're talking text, images, even computer code, all from a simple command you type in. So what's the brain behind that creative engine? Well, that would be the large language model, or LLM for short. Think of it as this incredibly powerful algorithm that's been trained on just a mind-boggling amount of data to understand, summarize, and generate text in a way that sounds, well, almost human. But here's the thing. All that amazing software doesn't just run on magic. It needs real physical hardware. And that's where semiconductors come into the picture. These are the powerful little silicon chips that do all the heavy lifting. Bottom line, without these chips, there is no AI, period. All right, so we've got the lingo down. We know the what. Now, let's pivot to the who and the how. Who are the big players in this space? And more importantly, how could you potentially invest in them? And when you talk about the key players, you can't avoid this group of tech titans called the Magnificent Seven. They pretty much dominate the conversation. What's interesting is they're all tackling AI from different angles. You've got NVIDIA making the must-have chips, you've got Microsoft and Alphabet in this epic software arms race, and then you have Amazon's cloud services powering countless AI startups. Their collective impact on the market is just immense. And this chart, this really brings that roaring back idea to life. Just look at this. A fund that tracks just these 7 stocks has seriously outperformed the wider S&P 500 so far this year. That gap you see right there, that's what investors are talking about. It's that AI effect they're all chasing. So, naturally, when you see performance like that, the next question is pretty obvious, right? For the average person, how do you even get a piece of this trend? Generally speaking, you've got 3 main routes you can take. First, you can go with individual stocks, basically placing your bet on specific companies you believe in. Or you can diversify with something called an ETF, which is kind of like buying a ready-made basket of a bunch of AI-related stocks. And third, you could choose a mutual fund, where a professional manager is making the picks for you. Okay, so let's put some real names to those ideas to make it less abstract. If you're talking individual stocks, you might think of a software giant like Microsoft or the chip leader, NVIDIA. For that broader basket approach, an ETF like IRBO tracks the whole robotics and AI sector, and for a managed fund, you've got options like this big one from BlackRock. Okay, we've seen the hype, we've seen the potential, we've seen the players. Now it's time for a crucial reality check, because any serious conversation about investing has to include the other side of the coin, weighing the risks against the rewards. And trust me, AI has plenty of both. So let's just lay it all out side by side. The very same thing that creates all that potential for explosive growth, volatility, is the exact same thing that creates the risk for huge losses. It cuts both ways. And yeah, while the demand for AI is just blowing up, the whole field is surrounded by these really tricky public questions and, maybe biggest of all, the complete unknown of how governments might regulate it down the road. Both of those things can seriously hit a company's stock price. And hey, it's not just me saying be cautious. Even a guy like Jeff Bezos from Amazon has hinted that AI might be in an industrial bubble. What he's getting at is this: when there's this much hype and this much money flooding into a new technology, it becomes incredibly hard to tell who the real long-term winners are going to be and who's just going to fizzle out.
And these risks go way beyond just the stock market going up and down. We're talking about some really deep, unseen hurdles here. Things like massive legal fights over who owns what, ethical questions about bias in the programs, and of course, that big, unpredictable cloud of future government regulation. These aren't just topics for a philosophy class. They are real, tangible business risks that could totally change a company's fortunes. So if there's one thing to really let sink in, it's this. High volatility is a total double-edged sword. Yes, it can lead to massive gains, but it can just as easily lead to massive losses. And all of this, everything we've talked about, it all boils down to the single most important factor in this entire discussion: your own personal comfort level with that risk.
So at the end of the day, the question isn't really, is AI a good investment or is it a bad investment? The only question that actually matters is it the right investment for you, for your financial goals? And that all comes down to one simple personal thing. How much of a roller coaster are you willing to ride? What's your risk tolerance?